Hello and welcome to a Thursday edition of the Homestead Mortgage Market Update. Thursday because yesterday we had some pretty striking news. The Federal Reserve finally lowered interest rates. The last time they lowered interest rates was in December of 2024. Thank goodness 9 months later, here we are. We are seeing a Federal Reserve rate cut, and mortgage rates actually, they went up. Interestingly enough. Now, if you've been watching Homestead Mortgage Market Updates for the last 5 weeks, this is not a shock to you. This is something that we have been discussing for a long time, but what I'd really like to do is discuss this and show this to you so that you can be informative to your buyers and you can make best decisions possible for the rest of 2025. So the average 30-year fixed rate mortgage is 6.26%, which is a significant drop from what we've seen the last couple weeks. This is very welcome. The 15 years 5.41. Do keep in mind this is a 30-year fixed rate mortgage that is a conventional loan, and it does require 20% down and some discount points. So your miles will vary, your results may vary. Don't expect everyone to get a 6.26, but this is average. So some people are already in the high fives with a conventional loan. Fantastic and exciting news. So what's going on with mortgage rates? Why did mortgage rates go up even though the Federal Reserve lowered rates? This is the big ticket news item for 2025. Well, here we can see mortgage-backed securities, and you have to remember, mortgages are a forward-facing investment. It takes 30 days to close escrow typically. So I can negotiate with buyers on an interest rate today, and I don't have to fork over the money for 30 days. So I can make commitments on something based on future potentials. And if it turns out the Federal Reserve has promised us and everyone thinks that they're going to lower interest rates, well, I'm going to try to be competitive with the rest of the market, get some buyers in the door now, pretend like I'm committing to something really fantastic, but in truth, I'm not really going to lose any money. I just get to advertise a whole month earlier, and then I can close my deals when it actually takes place. So that's exactly what occurred. And folks, this is what occurred for the last 4 interest rate cuts, even since September of 2024. In fact, that was the first interest rate cut the Federal Reserve did after COVID. Take a look at this chart here. This is 2024 September. We had our mortgage-backed securities, green and up is good, red and down is bad. Things were great. We leveled off. September 18th, folks, was the date of that rate cut. 25 basis points. We would expect this chart to go up with more green. In fact, no. On September 18th, what happened? We started to get in the red. Red and down is bad. That means mortgage interest rates are going up. Think inverse on this chart. Well, not only that, folks, not only that, when they announced interest rates to be cut in November, we thought we would get a little bit of a benefit. You can see that benefit started coming in, and then they actually did it on November 7th. Guess what happened? Interest rates actually went up again. Now, this is really not good. The reason for this is jobs data. We'll talk about that in just a second, but we're not done yet, folks, because it happened again in December. In fact, on December 18th, that's when the Federal Reserve did another 25 basis point rate cut. And guess what took place? Well, they went the wrong direction again. So, folks, it's not just because the Federal Reserve lowers interest rates. It's because of a lot of market conditions, inflation and jobs being some of the biggest ones. So let's analyze what happened this go around and what is in fact different about this time and last time. First off, you can see this chart is going in the great direction. It's going up. Before we were headed all down. But at the beginning of August, we got the news that the Federal Reserve was likely going to cut interest rates. Inflation had been handled, things in the economy have been going well, tariffs didn't impact us that much. So we got a 25 basis point rise in this chart, but a 25 basis point cut on mortgage rates a full month before the Federal Reserve did anything. But we tapered off and nothing really changed for a while. And then we got another 25 basis point and then another 25 basis point. What happened? Why is it that the Federal Reserve only promised 25 basis points for September, but mortgage rates improved about 75? Well, what actually took place is that We got some really bad jobs numbers. In fact, from March 2024 to March 2025, over 900,000 jobs were completely erased. And they weren't erased, they were just never created. They never actually happened. And these figures, most economists and most data scientists have been looking at and said, if we had these numbers back in 2024, we would have seen rate cuts as we expected back then. And if we go back to that section, we can see mortgage-backed securities going the exact wrong direction for such a long time, even though the Federal Reserve was cutting rates. Why? Well, because job numbers were not supporting rate cuts. So it was making a lot of mortgage lenders a little bit nervous on why this was taking place, and that the economy is not as good as people think it would be. So that's why we had such a stark contrast. So here's our homestead mortgage prediction of what's going to happen for the rest of 2025. Aside from really big, shocking changes, nothing. We're probably going to stay around this interest rate level for quite some time, the rest of this year. And the reason being is because we have seen a 75 basis point improvement over the last month, even though the Federal Reserve has only given us 0.25%. Now, big changes is job numbers, they get even worse. So the Federal Reserve realizes, shoot, we're in a really sticky situation. We better lower even more than what we think. And then the Federal Reserve has already promised another 25 basis point cuts for the rest of 2025. So hopefully this was informative. I hope that this is something that you can take to your buyers. And the truth and reality is, it's still a buyer's market. If nothing really is going to change for the rest of the year, now would be the time to get buyers in the door to get the best offer they possibly can on a house. And when interest rates do drop and it becomes a seller's market again, well, they can refinance. Thank you so much for your time. Share this with everyone you know, realtors, buyers, sellers, so that they can be better armed with information, especially when the next interest rate cut comes. Nothing might happen. Take care.